Hey everybody, this is Paul doing a quick update of my portfolio. Um, Wanted to show you how I'm positioned, um, how everything's been performing with with the China scare and the Wuhan virus thing going on, and just how I have seen money flowing versus kind of what you're seeing in the market. Also, we're in earnings season. Um, One thing you will notice that I have wound down some positions that I didn't plan on building up. And what that means is basically so EWJ, the Japan ETF, and then EW, the UK ETF, I wound those down and then also pulled some out of LTC. I had 48 share, I believe I had 50 shares last time I posted a video. And the primary reason for pulling money out of LTC was specifically because REITs, because of the massive investment that I put into realty income, it takes up a very large percent of my portfolio. So I could wind down LTC even more if I wanted to by 500,000. It would take a large amount. So what I'm gonna do is I'm not gonna do anything with REITs for a while. I'm just gonna let the dividends get reinvested on that, and then we'll just kind of go from there. But I'll build up other positions. Specifically, so what I did is when I sold money out of LTC, I specifically got into Southern Company, Coca-Cola. Um, that's where I went there. Also IBM. The reason I went into IBM specifically is just very simple. If you look at IBM, they're at a 13 PE multiple. They did something in their last earnings report that I believe more companies should be rewarded for, and that's they actually paid down debt. They didn't borrow money to pay down debt or say they were paying down debt. They didn't buy back shares with fake money. They actually paid down debt to raise their credit rating, which is something you're not really seeing, which is hopefully something you see a lot more of, or else that corporate debt problem is going to get way worse. Um, as many of you might know. So I'm hoping that you see more companies pay down debt. So I definitely jumped into IBM after their earnings report. They're down currently, but I mean, at a 13 multiple, if anything happens with easy credit from the Fed right now, you're going to see people jump into quality companies. So it is very easy to make decisions to put money into Southern Company that's sitting at a 15 multiple. Coke's actually at a higher multiple, but I actually like Coke because I buy Coke, so it just makes sense. Um, they, I'll also be jumping into Pepsi at some point. Um, just Coke was a little bit cheaper, and I just wish I'm trying to divide up the money. I actually put money in there today for Coke, or actually, sorry, for Southern Company. Um, they're just a really good. So specifically, what happened with Disney is the last time I bought Disney was at $130 before they did the run up with the Disney Plus and they started announcing subscribers. So it went up to 145. Disney went down to 142 today based on solely the Wuhan thing because everybody's telling everybody to avoid large entertainment things right now, and China is basically locking down the country. So I believe Disney has a park over there, so that might affect their earnings a little bit, but they're much more than just one park in China. So I guess everybody's expecting maybe that it might come to the United States and then it might affect their earnings. So they're really pricing in a really bad scenario. What that means for me is if this is what's getting priced in for a really bad scenario for Disney, I mean, that screams buying opportunity. I've been waiting for Disney to drop that down to at least 140, and I previously said that in one video where I was gonna wait for it to drop down because if you know anything about kids, then you know a lot of people are talking about Disney Plus, and just the different things that are built into it, like Hulu and ESPN, that I believe once they do their conference call, their earnings call, they're going to say that this Disney Plus thing has been very successful. And once the subscriber numbers come out, and they're probably going to buy back shares too. So I can easily see Disney going back up to 145. That's an easy buy. If anything, I might free up $500 worth of LTC to put more into Disney. That's an easy buy right now at 142. It's an easier buy if it even goes down. If it goes down to 139, 140, people get really paranoid, or if this Wuhan thing really hits the fan, that's an easy buy. Um, so yeah, we'll see how that goes. Um, so O is doing exactly what I expected it to do. It is jumping. It doesn't take much when you have that much invested in a stock for it to jump $100 in a day. It was up. If I would have made this video 2 days ago, it was up over when the Wuhan thing first came out. People flocked to safety, bonds rallied, so prices came down, which meant that's good for the REITs, obviously. So O went up by like $1, and I have 189 shares, so it went up by $230 in one day. And then they said, "Oh, the Wuhan thing's fine now," and then it went back down. And then all of a sudden today they said, "Oh, the Wuhan thing's really bad again," so it went back up again. So I'm not moving money out of O. It's just gonna sit there. I'm already up $129, and I just got this thing on last Friday, so I think I'm doing relatively good. The So I'm not moving to O investment whatsoever. So I did want to kind of go over how my performance has been going. This doesn't include today's, because if you notice the market's down 0.9% and I'm up. Today's gain 0.25, so this will actually have like a little bounce up. So I'll be above 2% here very soon. So right now the market is just basically trading headline news. So headline news is moving certain people out of positions, moving them into other positions. If we go over to CNBC, you can kind of see what's going on here. Whenever you get Wuhan news or any kind of like thing, you can just see people just flying into treasuries, 10-year, 30-year, 5-year, 2-year. If I go to my watch list, there's certain ones that people just flood into. TLT specifically is the 20-year, and you can see they just basically flood into this. And then also, if you set this up, you can see Travelers is getting hammered right now. Travelers is just basically what kind of says what it does what it says. But I would wait for this Wuhan thing. But if you're looking for a really nice stock to get into, it's at a 15 multiple. It pays out a monster dividend. I mean, EPS is an 8.9. I mean, it checks so many boxes for nice things to buy. If I free up any other money, I'll jump into this one. This is just one of those ones because this is just going to trade on headline news. So if the Wuhan thing gets worse, you're going to see this drop even more. And then all of a sudden, if they say, "Oh, it's contained, everything's fine now," you're going to see this one jump up. And you can literally just watch that. If you go to Travelers, TRV here, go to the chart, I mean, you can just kind of see if you expand it out one day, I mean, you can kind of see it basically. Oh, here's when you can just see it. This is a 1 month chart, so you can see basically it's going up, everything's fine. Oh, here's the Wuhan news, bye-bye. So that's an easy one to get into right now. I got that one from Gen X Dividend Investor, a guy I linked on my last video. This entire watch list is built off of just kind of stocks that he recommended. TLT and TLT is another one that I like to watch. That's the 20 years, sorry. And then Zeros is the 25-year. You can tell when people are just flocking into bonds. This is where they go. They're not buying actual bonds. They just jump right into an ETF that they could jump right out of, so that they don't have to go through the entire bond buying process and then bond selling process and then bid and auction process. So you can kind of see what's getting hit. Just yeah. So, but those are ones that are on my watch list right now. And then so this is how I'm doing at the moment. I fully expect IBM to keep going up. Um, it's at 142 right now. If you expand it out to 1 year, the highest it's been 150. You know, if you kind of look at the run up that it's had, it could easily run up even more. I'll hold that. Um, 10 shares of that right there gets me $16 every quarter. So, like I said, very easy one to jump into. Very extremely quality company. Um, for right now, and the only thing I might move money out of is LTC. That's just to buy more Disney. If Disney stays this low, if Disney goes any lower, I'm guaranteed selling LTC shares to get into it, just so I can wind down my REIT position a little. Um, that's currently how I'm doing right now. That's how life's going. The number that will appear on this video is 40,453. Or, well, it'll be this number, 40,455. That is, I believe, last video, minus 39,890, something like that. $565 higher. So I think I'm doing pretty good at the moment. Estimated income, let me show you this. This is not as even as it was before. Before I moved the money out of LTC, it was about 130 a month. So you can see now that I have dividend names in there, biannual dividend names too, that you can see how it kind of jumps. So my highest is going to be June at 161. That's if, this assumes I don't buy anything else. Here's my 1 month. So my highest is going to be in the middle of the month. I'll probably end up looking around to see if there's anything I can do to supplement right in this area, but once every 2 weeks they have a dividend payment, still pretty nice. And then also this right here is this is OP tax, that municipal bond that I have that I pulled money out of. So that one's actually going to pay out today or tonight. So $7.25. Extremely cheap municipal bond that's been paying out since the 80s, I think, or something. Let me go into it real fast just to show you guys what it looks like. If you're looking for just an extremely solid municipal bond, I believe this is the one. I'll take out the max. See how this thing goes all the way back to the 80s? And it's literally, so $7.71. It started at $7.09. If you kind of get the drift on how this thing moves. Here's your financial crisis where they thought the world was ending and everybody was going bankrupt. So your best chance to buy this is when everybody thought the world was going to end. I bought it right before 2018 because I just like municipal bonds for the free income, and it was $7. This one never moves. It stays in a range if you can't get the drift here. The only time it drops is when everybody piles out of it to go back into stocks, but ever since that tax bill, people have piled into it, and ever since that stuff in 2018 in December, everybody's piled into these things, and it literally just sits flat. If you go to the 1 year, you see how it's kind of rallying. Municipal bonds are actually doing some interesting things. The last month or so, 23 days, they've been rallying pretty good. If the earnings just come out amazing, I expect some money to come out of municipal bonds, maybe a few cents. The OP tax might go down to. This is my buy history. I just reinvested dividends, but if you look at the last time a share was bought, it was at 761 right here. See how it's at 756 up here in November. It's actually gone from 761 Just on this right here, I've already made a 1.31% gain. When I originally got in, if you notice this, 10% gain just on municipal bonds alone. If you got in, and this is a few days before the market tanked in December, or started to tank. So 10% return. Those are just ones I hold. Um, how am I looking for gains and losses? Um, Go to taxable. Short-term gain, 98. Long-term gain, I ain't gonna get taxed a penny on these. Um, that's just because of what tax bracket I'm in. As I put in previous videos, read your tax brackets, know your tax brackets. I'll get taxed on this at 12% right here. Um, but yeah. So definitely, like I said, always leave a comment if you see anything you don't like. I'll probably end up slowly moving into more. I'm starting to get sold on the dividend growth investor portfolio thing because everybody's so paranoid about the market dropping hard. And if you look at YouTube or if you look at Twitter on some people are really, really expecting the market to drop very, very hard. So what I'm specifically looking for is quality companies that are going to benefit if the market does decide it wants to drop in case the Fed is like, well, we don't care anymore. We're just going to let the market do what it's going to do. These are the types of companies that people are going to just pile into. The IBMs of the world, the Cokes of the world, basically just these very, very safe, proven dividend companies with solid balance sheets. Um, well, maybe not cat, because the people think the world's going to end. They're going to pile out a cat, but it's still a solid company. I mean, it's at a 13.8 PE, so if the world doesn't end, this is going to be one that benefits. Um, but it's getting caught up in China news at the moment. If you notice, I added all of these on the exact same date just so I can get a general idea of how they're performing since then. Duke alone, utilities, consumer cyclicals, just up pretty good. So definitely tell me what you think. Um, like I said, slowly kind of gonna move money into some of these other names, some of these names that are just solid. Um, just to balance out my portfolio because like I said, as you can see here, I'm definitely over concentrated in REITs right now, and I promise you that's going to change very soon. Probably going to build up I'm gonna just start building up my utilities portfolio. Get that above maybe 5,000, give or take a little. I should be able to do that by next month easily. Because tax return time. But and then maybe after that, build up the maybe consumer cyclicals, so like and Coke and Disney, maybe pile into there. But like I said, Disney's kind of my focus right now because once they report earnings and they have these blowout numbers for subscribers on Disney Plus, the market's going to be like, what parks? It's going to be just like when Apple said, hey, we sell phones, but hey, what about all this other stuff that we're doing? And all of a sudden the market started caring way more about that other stuff. If Disney starts throwing up Netflix numbers, I promise you right now, they'll start getting valued like Netflix. That one could if you see Disney start throwing up Netflix numbers, or they start saying, "Hey, we're seeing this consistent gain," people will really stop caring about they'll care about the parks and the income coming from the parks. But I promise you, if you look at anything going on with Apple right now, you can pretty much tell how the market would treat Disney. So there could be some severe upside on Disney. Um, So pretty much any chance I get to buy Disney, I'm just gonna take it. That's if I had to make a recommendation, what I'm going to put my money into. Um, so let me know if you have any ideas or see anything that just looks weird, or if you want me to explain anything. But that's me for the moment. So see y'all in a little bit.